All right, so we'll go ahead and get the session started. Let me put myself into my presentation. There we go. Right. So as we get started, one of the questions I always ask and kind of start with is this idea of, what is financial aid? And the reality is it's anything that is in place to assist you in paying those post-secondary expenses. And all of these kind of assistance, we're going to talk about the financial assistance, financial aid, however you want to categorize it, come from one of these 5 places. There's really nowhere else. Private sources kind of covers a lot, but within our entire financial aid system, the federal government there at the top with their loan and grant programs provide billions of dollars a year to students and families to cover their educational expenses. And as you work your way around through the states that we'll talk about, colleges and universities and their grants and scholarships, private sources that we'll talk about as well. The one thing I want to mention here, we're not going to cover it at length, is employer benefits. Some of you may not know as parents, if you have any of these, always check with your HR office, because it really is up to the position, the company, the place that you work, what is available to you. And so it's always important to ask what's out there, because there may be tuition matching, there may be all kinds of stuff that you don't know about just yet, but that way you have the opportunity to go and check with them if they do have any higher ed assistance for college moving forward. And so the first step as we get started, one of the very cool things that the Department of Ed has done is really simplify and put a lot of their information and their sources and their requirements and their steps all in one place. And so if you head to studentaid.gov, you're going to go, and this is your first step. Those of you who are seniors this year, you can do this right now if you haven't done it already. Your FSA ID is going to be really, really important moving through the process. It's how you're going to log in to submit the applications. It's how you're going to log in to do some of the next steps in about a year or so with some of the other programs you may be a part of or participating in. But this is something that you have to have, that you're going to use year after year as you file the free application for federal student aid. So it's really important to have this done. Keep it someplace safe where you can come back to it later on. But then both you, the student who will be attending, and a parent in the household will have to have your own FSA ID, so that each of you will have your own. It's tied to you individually as a person. It's connected to your social security number. So it's really important to have both of those ready to go before we actually file the FAFSA. And so with that, you're actually going to use this to log in at studentaid.gov, or the My Student Aid app, which we'll talk about. But this is where you go to actually get into and you file the FAFSA, or free application for federal student aid. This must be filed to receive federal student aid. It's required for many of the state and institutional programs as well. Last Friday was a very exciting day in my world. As crazy as it seems, the FAFSA opened for next fall. And so we know that we're going to be getting that information for the fall 2022-23 school year. And so those of you who are juniors, you're going to wait about a year. You can do this next year at this time. But those of you who are seniors, can everybody hear me okay? All right. I just got a message that I'm unstable at the moment, but that's okay. The FAFSA opening means that you can go in once you have your FSA ID and do that now. So if anybody has plans for the weekend, I know what you can do. You can go in and get that started, file the FAFSA. It doesn't take too long. It's about 45 minutes or so. But this standard form goes through, and right now it's about 108 questions. You don't have to answer all 108 questions. You're going to answer what pertains to you. It has skip logic built in, so it will move you through the FAFSA to get to exactly what you do need to answer. But it is going to take a little bit of time to get through the process. They have done things to make it much easier for you. as you go through. Those of you who are juniors that can't file the FAFSA yet, and even those of you who are seniors that will be filing for your second year starting next October, the CARES Act bill that was signed last November made some changes to our FAFSA and how it's going to be processed. You can see there it goes from 108 questions to 36 questions, which is a huge change. They've taken a lot of information out. One of the big changes that I just read about in the last week or so was that, so currently right now, the parent who the student lives with the majority of the year is who goes on the FAFSA. Starting with the 23-24 FAFSA, so the academic year 2023-24, regardless of who the parent lives with, it will be the parent that claims the student on the taxes is the parent that will be used. So this is different. So there's something to keep in mind and really paying attention to in a year or so when you get into those next steps with filing the FAFSA for that next academic year. Yeah, the question that just popped in, if there's anything that 9th and 10th graders can be doing to prepare, if you go to studentaid.gov, they have some great timelines, some checklists and things to do for your entire way through. 9th graders, not yet. Keep working on those good grades when you submit your applications. So that's really what you need to focus on right now. 10th grade, not a whole lot. Also, keep in mind, you can start looking for scholarships and those kinds of things, but really 11th grade, you can start having an idea of what, narrowing down your list, where you're going to be applying, those kinds of things. But those of you who are 11th graders, you're going to really, 9th, 10th, or 11th grade, you're going to wait until you get into those next steps. But really, those of you who are 12th graders, it's your time now. Get into the FAFSA, start filing that information. Each parent and student will have their own FSA ID. So you'll each have your own login information. So here's right now how you're able to file the FAFSA. Obviously, the FAFSA on the web, the My Student Mobile Aid app, the electronic filing are by far and away the most common. You still can print the PDF of the FAFSA out and fill it in by hand and submit it to the Department of Education. You can even call them and have them fill it out for you and dictate your information over the phone. Typically, the FAA access, which is the financial aid administrators, we're not going to do it for you. We're going to sit you down in front of a computer we have in the office or in a computer lab or wherever it may be, and we're going to walk you through you doing the FAFSA on your own. I do know Montgomery College is hosting a FAFSA night here very soon. So if you do have questions or need any assistance going through that, you can check that out on the Montgomery County Public Schools site to be a part of that process, to allow them to walk you through those steps and get the FAFSA filed. And here's just a quick screenshot, the studentaid.gov website. You can see there at the top, circled in yellow, apply for aid. The ability for you to come back to it if you don't have all the information at hand is all right here. So you can start, you can stop, you can save, you can come back later. Really trying to really simplify and ease the process for families as you go through everything. And this is the mobile app, My Student Aid mobile app. This is a place where you can file the FAFSA, but it's also a place where students can come back and get a lot of information after they've enrolled in school. And so things like the National Student Loan Data System, where they can check their student loan balances and who their servicer is and how much their payments might be in the future. Students can do their insurance counseling, informed borrower tool for their student loans if they're taking them. And so a lot more is going to happen throughout this tool than just filing the FAFSA after you are enrolled in college. But again, coming back, making it easier, putting it in a place where students are going to want to do it and putting it in a place where parents are going to want to do it. So the students on their mobile app, the parents on the computer, but really being able to go through and get your information in as quickly and easily as possible. So for those of you who are seniors, as I mentioned, it opens October 1, which was last Friday, but every year, the fall prior to the next academic year is when the FAFSA opens. And so every year that you're going to be enrolled and need financial aid, you will have to file the FAFSA as it stands right now. So for those of you who will be enrolling in fall 2022, the information that will be going on the FAFSA is actually your 2020 tax information. So they use what's called prior year. So it's 2 years prior on the taxes, but the ability for you to go in, they have made some strides in moving that information from the IRS into the FAFSA form through what's called the Irs Data Retrieval tool. Again, just another piece to simplify and streamline the process, and it ports your information directly from the IRS, what you have on file for your taxes and what they have kind of certified and have contained, and then moving that directly from the IRS into the FAFSA form so everything's true and correct. And again, it takes less time on your part. You don't have to go back and find your taxes. It is really important, though, that the information that you put into this Irs Data Retrieval tool matches exactly what is on your taxes. For instance, as simple as if you put ST period on your tax return, be sure that's what you put in the data retrieval tool, or else it will not match and it will not find that information for you. And so, as I mentioned, when you go through the sections, the parent information obviously is going to be there. The student information is going to be there. You got demographics. If the students worked or earned income, it's going to be included as well. The parent information will be there. It's going to be every parent within the household. And so if parents are divorced for this coming year, for fall 2022, it will be the parent that the student lives with 51% of the year is a student that, is the parent that goes on the FAFSA for the student. And if that parent is remarried, that step parent will be included as well. And so it is that household picture, that household income. So it does take everything into account at that point. Moving forward, as I mentioned, for fall 2023, it will be the parent, regardless of where the student is living, it will be the parent that's on the tax return that claims that student as an exemption or a dependent. So we're getting into, this change and this shift in how these processes are taking place. So just as you go through the FAFSA, be sure that if you have a question, you ask. You can ask us. You can ask the Department of Education with their help services. You can chat with them as you're going through it. You can call them or email them. Plus, as you're going through the form itself, there's all these little question mark bubbles that you're able to go through, and it gives you a lot of information as to exactly what to include and how to count specific fields, or if you should move forward, or whatever the case may be. So even if the parents live together and file separately, it's going to be the household information. So even if, yes, you're married, filing separately on your taxes, the entire household is going to be included with both parents' income and tax information. And so as we gather these, for this year, 108 questions, so we use all this information, how are we going to use it? And there's a couple of things that we want to be sure that you understand and how this entire process works. And what this does is this FAFSA form gives us a calculation. It's called your expected family contribution. This is your information. This is your EFC. This is what the Department of Education thinks that you, the family, can reasonably be expected to contribute to your child's education each year, or your own education each year if you happen to file the FAFSA for yourself. And so this number is not what you have to pay out of pocket. This number really dictates to us, the financial aid administrators, what your eligibility will be based off a number of variables that we'll talk about here in just a moment. This is how we know what your financial assistance or financial aid package will consist of. Certain EFCs are eligible for certain programs, certain EFCs are not. And so it really does put everything into place for us. But really understanding how all of this goes together is really important, because as we get into how you calculate this EFC right now, these are the big pieces that go into that calculation. So as I mentioned, the tax information, your 2020 taxes for the fall 2022 school year, but it uses a really kind of interesting calculation in that it uses 2-year-old tax information or 18-month-old tax information, but it uses current financial info. And so what you have in the bank the day that you hit submit on the FAFSA. So if you have $1,500 in your checking account, that's what goes in the FAFSA that day that you file the form. So it's really important to really take a look at that information. You port your IRS information over the data retrieval tool. You're going to look at your bank account or bank accounts and see what's in there, and that goes into the FAFSA for that day. And then right now, the number in household, the number in college are huge factors in terms of you have this income, you have this money, spreading it out over more people. Obviously, you're going to have fewer dollars to contribute to education. So it understands how all of that works. And then any untaxed income, so any child support received or clergy or military benefits that are monetary, you'll have in there in that untaxed income as well. 529 plans are included within the parent. If they are held by the parent, they will be included within the parent investment income section on the FAFSA form. If the money, or excuse me, if the 529 funds are owned by someone outside of the household, like a grandparent, they will not be included on the FAFSA form. So it really is what is held by the family within the household at that point. The stock market, if you have investment accounts that are not related to retirement, so Roth IRAs, 401ks, pension accounts, those retirement benefits are not included on the FAFSA. Those are for you moving forward. They're for a specific purpose. But if you have other investment accounts, like mutual funds or stock options or whatever the case may be, those will be included in that investment income at the value and worth at that day and point in time. There is another form out there. So this is the CSS profile. It is a supplement to the FAFSA. So this will be filed in addition to the FAFSA at these institutions. It is run by the College Board. It is their version of the financial reporting tool. It is used to determine only institutional programs. And so private schools will use this form in addition to the FAFSA to determine what your eligibility will be for their institutional grant programs and things like that. It does, if you make less than $100,000, you can file for free. They just changed that last week. But if you make over that in terms of a household, you will have to pay to file this form to the institutions that take it. If you go to CSS, and if you just Google CSS profile, it'll come up with the schools that take this. There are only about 400 across the country. They're all private institutions for the most part. And there are only 3 here in the state of Maryland, all of which are private schools: Hopkins, St. John's, and there's one more that I can't remember. But you can check the website. Typically, the institution's website will let you know that they are CSS profile schools, and that will, like I said, that will be in addition to the FAFSA form to be filed. So how are we going to use all of this? And so it's important to understand that, okay, so you have your FAFSA form, you've received your student aid report with your expected family contribution on it. You know, what does that really mean? Well, there's a couple of steps we have to take to get there. And one of those steps is really understanding how institutions come up with how much it's going to cost for you to attend. This idea of the cost of attendance is a full picture on not only the direct costs that you see there on the left, the tuition, the fees, the housing, the meals, what it's going to cost, and what we're going to charge you, the student, to be there for a semester or trimester, year, quarter, whatever the case may be, plus those other costs that we know are associated with the education, but we are not going to charge you for. We know that you're going to need books, but we don't charge you for books. You have to go out and find those on your own, either through the institution's bookstore or rent them through one of the programs that are out there, or Amazon or Barnes and Noble, or whatever the case may be. Transportation, it's going to cost you something to get to and from campus, either as a resident student a few times a semester or as a commuter student every day. Those personal expenses like going to Target and buying laundry detergent, all of these things that we've kind of accounted for within what it's going to cost you, the student, to attend for a year. And so this is your full cost of attendance. And this is really important to understand, because this cost of attendance plays a major factor in how we know what your eligibility is. So there's no specific income cap for financial aid. But the different pieces that we've talked about so far play a part and dictate on what your eligibility is and what programs you have for financial aid. And so as you can see there, we just talked about your cost of attendance, and you subtract your expected family contribution from the FAFSA or CSS profile, and that will give us your demonstrated financial need. This is not just, I need money to help pay for college. This is a calculation, as I mentioned, that dictates to us what your eligibility is. And so we'll talk a little bit about kind of how that works and what that means, because there are two very distinct categories of aid. There's need-based aid and non-need-based aid. They're pretty self-explanatory. Those need-based programs, a student is required to have financial need. The non-need-based programs, that's not a criteria for that. So the reality is, looking at this calculation, a student has an EFC of or we'll call it $20,000 is the student's EFC. If they attend an institution where the cost of attendance is $15,000, then their financial need is zero. They have no demonstrated financial need. Now, that same student also applies to a school that has a cost of attendance of $30,000. Their financial need at that school is $15,000. So it really depends on the institution as to what your financial need will be. And so at one school, you will be eligible for need-based aid. At the other school, you won't. And so each individual school is going to have their own cost of attendance. You're going to have your EFC, and your financial assistance packages are going to differ from institution to institution on a number of different things that we'll talk about. But these need-based and non-need-based programs are important to understand, because it really, again, brings us kind of the next step of the types of aid a student is eligible for. And so that gift aid that you see there, scholarships and grants, this is financial aid that you don't need to pay back. You don't have to earn in any way. It's awarded to you for various reasons that we'll talk about. And the other side, the self-help aid, loans, you're going to pay those back in the future. Work study, you're going to work to earn funds to help cover your cost of attendance. And so all of these, in many cases, will be a part, again, if you're eligible for these different types of aid, dictated by the categories that you fall into if you have financial need or you don't have financial need. And so the main sources of aid, that circle that we looked at the very beginning, those 5 different areas, we're going to talk about 3 of those right now: institutional, state, and private. As I mentioned, employer benefits, if you have those, you can check with your HR office and see what they have to offer you. But also the federal programs, the biggest one that we'll talk about towards the end in the federal loan programs. But these main sources of aid, as we get into this idea of institutional funding, you saw in that chart there the scholarships and grants, that gift aid category. Scholarships, as I mentioned, with a bit more of an explanation, are awarded on a student's achievement of some kind. They've done something to receive recognition for this achievement. The institution will have their own criteria. The institution may have their own scholarship application deadlines. It's all up to the individual institution as to how they scholarship, how much they will scholarship, what the requirements are for scholarship. At small schools like St. Mary's, typically it's very simple, very straightforward. You apply for admission, you receive scholarship based off your academics. There are some schools that the colleges within the universities have their own application policy and procedure If it's the School of Engineering, it may be one thing. If it's a School of Music, it may be something completely different. So it's really important that you understand not only what the requirements are, but when it is due by. In many cases, that scholarship deadline may be prior to the application, the deadline for admission. So it's really important to understand how all of those deadlines play with one another as you're going through looking at making your short list. And the grants work off of that need-based category. Students who have higher need may receive grants to help and assist in covering that cost of attendance. And this really is that gift aid based off of that financial need that we talked about. Again, that will differ from institution to institution as you move forward. So I wouldn't say, and Kate, thank you for answering that question. I wouldn't say that a student or family is penalized for saving for college. The idea is that this expected family contribution is calculated based on what you have saved for college. So the assumption is that you're going to use what you've saved for college to pay for college. So you've done the right thing by many standards. And so going through and having that either 529 savings plan or prepaid or whatever the case may be, will be accounted for in the expected family contribution. But the idea is to be able to use that for those educational expenses. And then one of the things that has changed and I think has been a great addition to availability for Maryland students is this Maryland state funding. They've added a number of programs over the recent past. It can only be used here in the state of Maryland by Maryland participating institutions. That means all public schools, as well as the vast majority of the private institutions are participating institutions as well. But you must have your FAFSA on file prior to March 1st. It's very, very important. If you are late, you're not eligible for many of the programs they have to offer, one of which is a phenomenal need-based program for students that awards up to 19.4 this year, I believe, 19.2, 19.4. There are other programs for occupational. There are other for students going into specific occupations. There are other programs based off of special populations. There are the legislative scholarships that you see there. We tell all of our students to go out and apply for those because we have students right now who are being awarded 2 and 3 times by the same senator or delegate because they have no one else to award the money to. So it's really important. Go and check those out. mdelect.net will tell you who your legislators are, how to get in contact with them, and really get in touch with them to submit those applications. And then one of the other things they implemented about 3 years ago was a Maryland State Financial Aid Application, or MISFA, for students who are undocumented or have DACA status. They can file this form and still be eligible for those need-based programs within the state of Maryland. And so we have a couple of students this year who have filed the MISFA and are receiving one of the EA Rawlings grants of $3,000 a year. So that's a great question. The money in savings account will all be counted fairly similarly, even if it's, as you mentioned, the kind of hedging against an unsure circumstance, it will be accounted for within that section in the parent section for what you have in the bank. It's, again, not what you have to pay out of pocket right now. And so to keep that in mind, there are other ways to pay what's there. It's more of a dictator for us as to what your eligibility will be for the programs and how your financial aid will be packaged and how it will be put together. Don't think that just because your EFC is X number of dollars and you have to pay Y number of dollars because that's what the EFC says. Now, in many cases, you may have to finance some of that and not pay it all out of pocket all at once. But that's kind of up to how you would like to put all of those pieces together to be sure that is working the best for you. The ability for you to involve payment plans, so you're paying throughout the year and not in one lump sum, are always there. So It's really important, I think, to file the FAFSA, even if you don't think you're going to be eligible for anything. You may have a high EFC, but then you're only closing doors. And so it's really important to have those doors open. If it's the federal loan programs that we'll talk about, if it's the Maryland state programs that you may be eligible for, as you can see there, some are on the basis of need and merit. And so even if you don't technically have any financial need, you still have to have the FAFSA on file to be eligible. So it's really important. There are some institutions that won't offer anything unless you have the FAFSA filed. So really do it the first year, know where you stand and know what you have available to you. If you don't feel like you need to do it the next year, that's your call. That's completely up to you. But I always tell families, even if your EFC is maxed out at 999999, which is the highest that it goes, do it that first year. You don't know what's going to be available to you and what's out there moving forward. In some cases, the assets such as real estate, if it's investment real estate, if it is a investment property, it will be the CSS profile does take into account all of your property, all of your equity within that property. Those assets that are investment assets do count within that FAFSA calculation. And if you are a divorced parent and you have an agreement where one family member claims that on the taxes 1 year and you claim the next year, whatever the case may be, as it stands right now for fall 2022, that does not matter. It's whichever parent the student lives with the majority of that calendar year. Moving forward to 2023, that will change. It will be the parent that claims the student on the taxes that will be included. So it may change. It may flip-flop from year to year. And then the outside scholarships, these private sources, these outside funding spaces, there's really not a lot that we can do. It really is up to the student to go out and hustle, and really find these programs and be able to apply for them. These search engines that we have listed here, Montgomery County Public Schools has a great list of scholarships that students can go out and apply for. It really is up to the student to go out and find those scholarships they know they qualify for to begin with, and then make those applications moving forward. And the reality is they are everywhere. You can go out and find them through private organizations, companies, service organizations. Just about everybody has a scholarship right now. So really just going out and doing that work and finding those programs. And so I always pause here for just a second to not only take a sip of water, but also talk about the fact that loans are, some would say, unfortunately, a part of the higher educational landscape at this point. Unless there is a drastic change within how the Department of Education and the federal government works, loans will continue to be a part of this process. And to understand how these work, I think, is really important with this idea of financial literacy. But having an understanding and really being able to know how we're going to put these loan packages together, but also know that the stories that you hear of students that come out with $125,000, $150,000 in student loan debt, those are not undergraduate students. The federal loan programs are built out so that students cannot have that much financial burden. Those are doctors, those are lawyers, those are students who have gone to many years of postgraduate work. It really is about putting students into a place where they can contribute and pay back in time towards their education. But really understanding how all of this fits together starts with what we can offer and what there is out there for students to have. The Stafford Loan programs are the federal loan programs. As soon as a student files the FAFSA and we have that FAFSA on record, they're eligible for those student loans. The FAFSA is their application for that. It's an entitlement to them. Once they have it filed, they have this opportunity or option. They're not required to take the loans, but they have that option there for them. And you can see there that parent or plus loan is a part of that Stafford Loan program as well. That does come with an additional application on behalf of the parent for the student's education. But those are all there to take some of that initial burden off of the bill from year to year. And the other side, and what I would always consider to be the second option, are the private source loans. The private lenders, banks, credit unions, those kinds of things, you won't find a better loan rate than you will with the federal programs in 95% of the cases. The terms of the loan are typically better with the Stafford Loan programs as well. You can adjust them and work with your servicer for those loans. So like I said, the private loans are really the second option if needed in the future, but those Stafford Loan programs should be the first look. The Parent Plus loan does not have a cap. You can set a max amount per year that you would like to use within that Parent Plus loan. But there is no Parent Plus loan cap. We'll talk about the student caps in just a second. But as you saw there with the student options, the subsidized, the unsubsidized loans, the direct subsidized loans. So calling back to a few slides ago, a student must have financial need to be eligible to receive the subsidized loan. We will determine exactly what your eligibility is, but the ability for you to receive the sub loan is determined by that financial need. The key to this is the interest on this loan is subsidized while you're enrolled in school. The unsubsidized student loan that every student is eligible for, regardless of financial need, does not have that same subsidy of the interest. So that interest will accrue. If I get my head out of the way, you can see it. But the interest does accrue on that loan while the student is enrolled in school and when they start making those payments back. They both come with a 6-month deferment, so you can get your feet on the ground and find a job and start making some money and then start paying the loans back. But it does, that interest subsidy is really a key part to that subsidized student loan. So we always recommend that if a student has an unsubsidized student loan, literally a couple of bucks a month will keep that interest kind of at bay for that student loan, to be sure that you have the ability to come out after 4 years, give or take, with the principal that you started with to be moving forward in a really good way. With sequestration came the lender fees for the direct loan programs as well. Unfortunately, this means, as you can see here in my example, the student is responsible for $5,500, but they're only benefiting from the majority of that, but still they're knocking $58 off the top of the loan as that loan fee. These do change every year. They don't change a lot, as you can see. I don't know really what 0.02% will do for you in terms of total amounts of money, but apparently it's enough to make the change. Same goes for the interest rates. All of these are set by Congress for us in terms of these federal loan programs. It did go up just a touch from last year, but as you can see, in terms of the student loan rates, you're not going to find a better rate in a private loan option. And these are set for the life of the loan. The life of the loan, the student has to pay, it's for that academic year. So these rates will change from year to year, but the loan that you took in that year will remain the same for that interest rate. That being said, it's really important to understand that kind of putting all the pieces together, a student who takes a subsidized and unsubsidized student loan may have upwards of 6 or 8 loans throughout their time. They'll have a subsidized loan, they'll have an unsubsidized loan for the first year, they'll have a sub and an unsub for the second year and the third year and the fourth year, all with different interest rates. And so that consolidation process and the process that you can work with your loan servicers is really important to undertake, so you can kind of wrap it all and bundle it all up into a much more manageable package after you're done with school. So here, as I mentioned, not putting this massive loan burden on these students. The undergraduate dependent students will fall into this blue box. And as you can see in that red box, that first year, the max allowed amount that we can give a student under most circumstances is $5,500. The national average right now, somewhere around $28,000. At St. Mary's, we're around $22,000. And so I will, a quick plug, if you will, St. Mary's has the lowest loan indebtedness of public institutions in the state of Maryland. And so something that we're very proud of and we're trying very hard to maintain. But the ability for students to come out with somewhere around $22,000 of student loan debt after 4 years of education, upon graduating with their degree, their payments are somewhere around $190 to $220 a month. And that's with a standard 10-year repayment plan. This does not include those students that go out and do income-based repayment or gradual repayment, where it actually starts at a much lower rate, like $110 a month, and then it goes up to $150 a month, and then it goes up to $180 a month after a period of time. Or students that can extend these loan periods out to 15, 20, or 25 years. And so it really does give students a lot of options in how they're going to repay these student loans throughout the next, like I said, 10, 15, 20 plus years. And so as exciting as student loans are and all the minutia that goes into all of those pieces that, again, we understand and know the rules behind that, and we will put all those pieces together for you. There are some other things that we should talk about, things that we can do as well. And one of those kind of really importantly right now, with everything that's been happening with families that have been in places that are not the best place to be in many cases. And so if there's anything that you can't really show within the FAFSA that is really just a lot of numbers, we have this process called a special circumstances or professional judgment process. And it allows us financial aid administrators to go in with documentation and justification based off of what you've given to us to make changes to benefit the student and the family. And so that really, in simplified terms, bring the EFC down. So we know with this entire process that we can make these changes. So if, with the 2022 year using 2020 taxes, if the 2020 year was not great, then we can make those changes. And so if a parent lost income or they lost their job, we can literally go in and zero out the income of that parent within the FAFSA form with that documentation to, again, hopefully benefit the student in a number of ways. It is really important to understand that all these different pieces can be accounted for, plus some others, but this will be on a case-by-case basis. And so you'll have to contact, especially that first year, each individual institution to go through this process with that institution. They may have their own forms, they may have their own requirements or procedures or policy, whatever the case may be. This is not something that we can do for everyone else. If a student applies to St. Mary's, they have to do it at each individual place. And they'll work with you through this process to really take into account what it is that you're submitting to us to, again, benefit students the best way that we can. And then the financial aid packages, in many cases, I did a kind of unscientific poll of my colleagues in higher ed. You'll receive the financial aid packages a bit after you'll receive your admission decision. I know College Park waits until the new year. So it will be, if you apply early action, which most of their students do, it'll be a couple of months before you get your financial aid packages. So just keep in mind that you have time. You don't have to make a decision on where you'll be attending until May. The idea being that you'll have all of this information, the package, including federal, state, institutional grants, scholarships, loan programs, work study programs, payment plans, whatever it is that's within that financial assistance package. You're going to have all of the information together to be sure that you can make the best decision, because we understand that finances are a huge determining factor within this decision. It's a huge decision, huge process. So having all that information there is really, really important. And then a couple of tools. I talked about studentaid.gov and some of the resources they have there, timelines, checklists, things that you can do, things you can think about, starting the process, FSA ID, filing the FAFSA, the loan programs, all this information is there. They really work to centralize all this process and information for students. And then the Federal Student Aid Estimator launched a couple of weeks ago. That will give you a good idea of right now the EFC and then the Student Aid Index moving forward. But they have a really cool college cost worksheet tool that can be very, very helpful to really get you to understand how all of the costs work with individual institutions and how it all kind of plays out. And then every school who participates in what's called Title IV is required to have by law a net price calc on their website So you can go in and look at and get a pretty good idea of what it will cost out of pocket. So that's what the net price is for a year of education as it stands right now. And then the last thing that I kind of want to touch on is this idea of cost, net cost, and value. So the cost, as we talked about, this is what we're going to charge you. This is tuition, fees, housing, meals. This is what it's going to cost on the bill for you to attend an institution. Taking away any gift aid that you've received, the scholarships and grants, if they're from the institution or the state of Maryland or an outside source, subtracting all that free money gives you your net cost. This is what will actually have to be paid somehow. This cost will be covered through payment plans or 529s or savings or loans or whatever the case may be, whatever works together or a combination thereof. But this is what it will actually cost you out of pocket for a year or semester or whatever it is. And it's really important for us that you understand that, because we know that students are excited, and they should be, when they receive a scholarship of $30,000 or $25,000 or whatever the case may be. But it's really important to understand that the schools that offer those $20,000, $25,000, $30,000, $35,000 scholarships are also schools that cost $55,000, $60,000, $65,000, $70,000. I even saw $80,000 this year. And so that $30,000 scholarship at a school that costs $60,000 or $65,000 still leaves you with $30,000 or $35,000 to pay out of pocket. To the contrary, a school like St. Mary's, a $6,000 scholarship at St. Mary's, or even $7,000, maybe, dollar to dollar, is less, but the purchasing value of that scholarship is much greater. In reality, our cost of attendance this year is $30,000. And so if you get a $6,000 scholarship, you're already at 24. So you're looking at a difference of almost $10,000 between the school that gave you the $30,000 scholarship and the school that gave you the $6,000 scholarship. So it's really important to understand how that works, and don't be, from my side at little St. Mary's, don't be swayed by the big money scholarships as much. It doesn't mean we want to recognize you any less. It's just how kind of all the math works out for everybody. But really associated with that, the idea of value is really important to us as well, because we feel that we have a wonderful value in education. But it really determines in how it really matters in how you determine what that value is to you personally. It's a very subjective idea. If it's wonderful programs, if it's the major you want, if it's the location and the environment, if it's you feel at home when you're there, which I hope you do, or if it's other things like the fact that we can boast the highest four-year graduation rate in the state of Maryland, or as I mentioned, our lowest in student indebtedness, or the ability that even in the middle of a pandemic, 93% of our graduating class is out doing something awesome. So really having those different value points is really, really important to you to figure out what those are. So you can go and say, yes, this school may cost a little bit more year to year, but we'll only have to pay 4 years of tuition as opposed to 5 or 6 years of tuition. So really having all those different, as I mentioned, value points, understanding what are really, really important to you. So if there are questions, if there are concerns, if there are ideas, anything at all, please send us an email, chat with us on our live chat function we have on our website. Really give us a shout out. Our email is listed there. I will forward this video and the presentation slide deck to Kate probably tomorrow after everything gets taken care of. But I did see a couple of questions pop into the chat here. So not necessarily. The student can receive the $5,500 federal loan. Coming up with $20,000 is relative. It depends on all the other pieces to the financial package as well. In many cases, you will have a grant or scholarship, or if you're eligible for any of the federal programs. So it really all depends on that financial aid package that you receive and all the pieces that are included in that. So no, you won't have to have $20,000 a year out of pocket or in a loan necessarily. In some instances, there are students that's all they receive. And so we have students that attend St. Mary's that their EFC is at a point where they're not eligible for any of the need-based programs. They have a scholarship for a few $1,000s, and then the rest of it is covered either through payments or through loan options. So again, it's gonna, nobody can say right now, yes, this is what you have to pay. It really is going to be made up by all of the other factors kind of on the other end as you move forward. Early decision, when do you find out about aid? Again, that's going to be determined by the institutions. Here at St. Mary's, you're going to hear from the Office of Admission before Thanksgiving, and you'll hear from us shortly after we return from Thanksgiving break in early December. So it really does depend on the institution and how everybody puts their timelines together for everything. Any other questions about anything?
Very thorough, Rob. Thank you.
Oh, you're welcome.
As always. What was that? EDs.